Hello and welcome to CMC Markets on Thursday the 20th of June, and our weekly look at the markets with our premium client sales traders. Joining me this week is Alex Young. It's been a while since I've done one of these, Alex, isn't it? So I may be a little bit...
I'm sure you'll be all right, Michael. I'll look after you.
Well, I'm glad of that, because I'm a little bit rusty. So it's been a choppy week for our clients. We can certainly see that. What we're going to look at today is behind me on the screen. We're going to have a look at some of the key levels on euro dollar, the FTSE UK 100, the S&P 500, the US 10-year note, the cash, and gold. We've seen a massive sell-off in gold, and it's all because of the Fed. What have our clients made so far of this sell-off in gold and this sell-off in equity markets? Have they been the right side of it?
Well, in gold, they've found themselves the wrong side of the move, which, to be honest, I'm sure is up there with the rest of the market. I mean, we've had a sustained sell-off in gold over the last few weeks and months, accelerated on Wednesday night with Bernanke's comments. I mean, we've seen things. I mean, I guess you could say we're in a sort of bit of a perfect storm with gold prices at the moment. I mean, weaker China data we also had on Wednesday.
We had that overnight as well. We had a very weak manufacturing PMI data,
yes,
as well as concerns about a credit crunch in China, in the same way that we had one with respect to Lehman's in 2008. Yeah, you're absolutely right. Yep. I mean, we can see the gold chart here. Let's have a look at it. You know, it's quite an interesting chart. We can see from the lows in 2008, that $680 mark, that basically prompted the rally all the way to 19,000, or wish, 1,920. We're right on the 50% retracement level, around about 1,300. At the moment, we're trying to break below that. Let's have a look at the client sentiment and see whether or not our clients are the right side of that. We can see that they're not. 76% long. I think a lot of people were expecting that to hold. And
yeah, it's been quite steady around those kind of levels all this week. I think it's worth mentioning that, as well as the shorter term traders, you will have other people with positions with a slightly longer term view, with using gold as an inflation hedge. I think it's obviously
there is only inflation at the moment, but that's not to say that there won't be going
with a longer
forward.
term position. Yeah. It might take a bit more time for that re-evaluation to take place in people's portfolios. So I'm sure we'll see that coming to effect in the numbers.
We could well see that. Let's have a look at the US 10-year note, the Treasury, because we've seen those yields spike up quite significantly in the wake of Mr. Bernanke's little performance last night, and we can see that our clients are short 10-year Treasuries by about 76%. But as we can see from this chart, which I'm just about to put up on the screen, we can also see that we're approaching the 200-week moving average, which has basically held this uptrend in treasuries for quite some time, as we can see that here. Do our clients have a really strong view on that? I suspect that they probably don't.
No, not hugely. I mean, you can see from that I mean, whenever treasuries are getting away from that 200-day moving average, 200-week, yeah. Apologies, you do see a natural retracement back to it. And I think there will be, some buying coming back there.
Sorry to interrupt. Do we think that this current sell-off is overdone? Well, or do your clients give you the impression they think it's overdone?
I mean, I think in terms of the way the clients are playing it, they are just looking at the price coming off, and at the moment are in a phase of buying dips. Just like you have in equity markets, it takes a while for that transition to change around. It does look. Prices do look good value to clients in a number of different markets at the moment, treasuries being one of them, and it will take a while for that, for that to filter through, or perhaps to see a sea change in sentiment. Yeah,
I mean, you talked about indices, and here's a classic case in point, our old favourite, the S&P 500, and that 1595 area is looking extremely interesting. Let me just zoom it out so we can get a little bit more detail on it, because I think we can see straight away that 1595 area.
The resistance in the rally in April.
Resistance on the way up, absolutely. We broke above it, and we've held above it on 2 occasions since then, and we're now approaching it again. which I think is quite significant. If we do break below that, let's see what our client sentiment is with respect to that, because I think that could be actually quite telling. See, our clients are short into it, so they're the right side of it.
Yeah, quite. They've been the right side of the move in the S&P this week. I mean, they were more short at the beginning of the week, which is interesting.
Squeezed, didn't they?
Yeah, I mean, the bias has come, starting to swing back towards long positions. We were about 23% long at the beginning of the week, now 37%, as you can see. Part of that will be profit taking on some of the short positions later in the week after the move on Wednesday. Maybe the thought creeping into people's people's trading that the sell-off was a bit of an overreaction, maybe starting to see a bounce, and others also coming just looking to pick the bottom there.
Yeah, absolutely, and I think it's very telling that the markets have sold off, but the message from the Fed is actually optimistic. They're optimistic about the US economy. That should be a good thing, shouldn't it? Is that a good thing? The US economy is recovering, or maybe the markets think that they're being slightly over-optimistic. Well, that could be the other side of the coin. Yeah. But we are massively up on the year. So I think when you look back at the S&P 500 chart that we were looking at a minute ago, you could see how far away the pricing was from the 200-week moving average. So that does suggest there's a little bit of an adjustment process to go on. Yeah. Can't say the same about this particular chart. UK 100, the FTSE 100. The buyers to sellers, the balance is slightly different, more long than short.
Quite very different to the US indices, which is, interesting to note. I mean, you have, I guess perhaps an explanation in that you've seen much more of a sell-off in percentage terms in the European indices, UK 100 in particular, than you have, this is over the last month, than you have in the US indices. So perhaps people are taking the view that the US has got further to go, or just see more value in the European indices around these levels. As you say, 60% long now. It was closer to sort of 75% long at the beginning of the week, the UK 100. So people starting to taper their positions. Had to get that in, Michael. Sorry.
You had to get that in. I'm sure we're going to get emails about that one. But we can see that on the UK 100. Again, it's fairly similar to the S&P in terms of the support level, which is around about this 6,200 area. Now we have broken slightly below it, but notice this 200-day, 200-week moving average. I can't remember whether this is a weekly chart or a daily chart. Let me just have a quick look at it. It's a daily chart. So it's a 200-day moving average at 61.55. So even if we do break lower, there's probably going to be a little bit of natural buying interest around about that level. And I think largely the reason the UK 100 is as low as it is obviously concern about what's going on in China and the growth downgrades from various banks.
And our heavy weighting on the mining sector, as you're alluding to.
Yeah, absolutely. Okay, euro dollar's been quite quiet this week, hasn't it? Until the last couple of days. And I think one of the things that's really surprised me is how resilient it's been. We look at the economic data in Europe. It's not great, is it?
No.
No, I mean, we're seeing sort of this week that it's been particularly disappointing. We had the PMIs out earlier today. Germany is a bit of a concern. Let's look at euro dollar, because I think our clients, what's their positioning with respect to that? Are they bullish or bearish on that? 65% short. So, that suggests to me, again, they're the right way round. I seem to recall that they were actually short earlier this week, getting squeezed, because we went up to 134. But obviously, the hawkish Fed has really given us a much more bullish US dollar. And as a result, we can see that here on this chart, this euro dollar chart.
That momentum is quite hard for people to ignore, whatever their basic views might be, whether they're in agreement with the charts or not. When you do see momentum like that, it's very hard to ignore it. So you have seen people get on board that euro dollar trade, certainly over the course of the week. Yeah.
Well, certainly look at the last 2 days there. I mean, and actually yesterday, after the Fed meeting, we were trading around about 134, and we were trading at 132 within about 2 hours. And those of you who know that I'm a big fan of Japanese candlestick charts, look at yesterday's candle. It's a bearish engulfing day, which suggests that if we break below this 130, 160 area, which I've highlighted below, then we could see a move down to the 200-day moving average on 130.50. And certainly our clients, good news for them because they're net short, could see significant amount of profits from that trade if they stick with it. Okay, I think that pretty much wraps it up for this week. One thing I would say, keep an eye on the key data next week. We've got UK GDP final revision, US GDP final revision. We have got German unemployment and the German IFO. Don't underestimate the effects that the floods in Germany will have on economic output going forward. That could weigh on the German economy. So I think from Europe's point of view, what the Fed has done or announced this week is actually good for Europe because it's going to push euro-dollar lower. So we need to keep an eye on that. Otherwise, unless you've got anything to add, Alex?
Nothing further to add.
I'm going to wrap this up for this week. Thanks very much for listening. This is Michael Hewson and Alex Young talking to you from CMC Markets.
Thanks, guys.